All right, so every day I use a simple but effective trading strategy to find high probability setups on the SPY. No complicated indicators, no second guessing, and just a rule based system that I typically follow with discipline. So, one thing you know about SPY is that it is one of the most liquid ETFs to trade. I use what I essentially call 20 EMA strategy. If you follow me in my videos, you know how this works. But if you are new, I'll go ahead and cover that with you now. And the strategy allows me to take advantage of clean price action. And in this video here, I'm going to go ahead and break down my exact approach step by step so that you can see how I apply it in real time. And if you find this valuable, if you don't mind hitting the subscribe button, that'd be great. We're trying to get 1,000 subscribers in 30 days. So hit the like button, subscribe, and turn on notifications and comment. Let us know if this works for you. The first thing I do every morning is define the trading zone. So what I typically do is I wait for 15 minutes and I place a trade. I mean, I place a trade, but I place the line at the top and the bottom of that 15-minute zone. Now you're going to see here, I didn't expand it quite yet. Eventually, I actually do end up expanding this, but so here's the top and the bottom of that 15-minute zone. And what I'm waiting for, and in red, you're going to see it, is the 20 EMA. And I'm looking for that 20 EMA to clear this zone. And not until it clears it toward the top or toward the bottom do I start getting into this trade. So the first 15 minutes, again, high and low bars, that's the gate. The trend filter is going to be our 20 EMA. And then the breakout really is going to be once the price clears, either towards the top or towards the bottom, and then the 20 EMA, what I call clearing the gate, which would be passing between these two levels. Now, let's go ahead and see how this works out, because even though, yes, that's how I start the day, this trading day was a little bit different. Keep in mind, this is all being done during a time when we have tariffs and we have, a lot of volatility in the market, unusual volatility that we typically don't have on the SPY specifically. Now, just to define what we're doing here is on the left, I have my charts. On the right, I trade in Top Step. Some of you might use options. That's fine too. But in Top Step, I keep an Express account that we have funded. And then I have a Combine that I'm building as well. I typically trade one contract on the Express account and then two contracts on the Combine, getting me close to or up and around that $500 a day on the Combine, and about 250 or so, around 250, consistently on the Express. So let's take a look at this to see how this day works out. So here, now you'll notice right off the bat, we'll go ahead and roll the tape, and you're going to see this price start to drop. Okay. So, and one thing you notice too is that I moved my indicator. You might think to yourself, well, why would you do that? Because you just said that you place your indicator at that 15, right? So why bother moving it at all? A couple things. Well, first of all, I know that you don't see it here, I noticed that we're kind of in the middle of a flag on the 1 hour chart. So without this 20 EMA really getting into my 15-minute gate, because you had the uptrend here, I want to see this get into I want to see this get into the middle of a gate. So I felt comfortable placing the stop right here, not the stop, but the line right there. So place the line. Now it's going to dip. Now I'm not going to move it at this point. I'm just going to leave it right there. And we'll see what ends up happening. So you'll see it come down. Now it's going to go ahead and start to resist. There we go. Look at that upward movement. Okay. So now, with my 20 EMA strategy, what I typically do is I would wait for it to leave the gate. So again, looking up here where it once was, and you would say, well, it's starting to move, and now you have your flash of green. Are you looking to enter the trade right here? So the answer to that is no. And the reason is because if you look at, I like to place my stop 2 times the ATR, right? If you're looking at that, that's roughly about $1 up. If I go $1 up from this price point, then I'm in the middle of that range, right? So I'm not liking it. So I'm still staying out of the trade at this point. I want to see this really start to break down, where if I were to go $1 out or even 50 cents out over the ATR, or 50 cents back from where the the price action is, I'm not in the middle of some previous range. I want to see it break down or break above. So I'm holding out at this point, of the trade. So that ended up being a good thing because as you can see here, the price comes back up. So we were indeed, as I thought, in the middle of a big range. It comes here, it breaks, and now here comes the 20 EMA, right? Now, what I'm typically looking for is it to leave the 15-minute range, which is right here, which it currently is. Now, I expanded the range once again to here because I saw this pullback, and I wanted to see it really break above this to feel as though we had a trend going on. So in other words, if if we broke here and it popped up and it came back down, I'm moving my bar now to here, right? I want to see it really break above that. Otherwise, even if it were to flash up around here and come back down to here, well, now you're just right up against your previous level, which is right here, right? So that's important. Now, where do you get in? So what I'm looking for is you'll notice we have this flash of red right here, right? So if we come up here, what I'm looking to do is I'm looking to get an order in at about a third of this level right here at the bottom of it. So if you look over here, you'll notice I've done that, right? I have my order placed and I'm waiting for the price to come back and hit that level. I'm looking for this to clear the 20 EMA to clear the 15, for this to flash red and enter for the bottom third in this case of this level. And because you have a lot of resistance down here, I may not get it if I enter right at the bottom, but I'm looking for about the bottom third. So let's see what ends up happening. And the price starts to go up. It's going up. Oh, there's the news. Goes up, goes up. Okay, now it's coming back. Okay. All right, so there we go. Now we've hit it, right? So what I've done over on Top over here is I placed one order on my funded and two on my combine, and pretty much at the same spot. And then what I did is I went ahead and placed my stop about $1 below where I came in at, which is going to put me down here. So all the way down here, which if you're looking at that, you're thinking, okay, well, you're only getting like, 225, 400. But the problem is with all the volatility right now with the market, I didn't feel 100% comfortable putting my stop kind of right below this level, right? Just because with everything that's going on, this market's all over the place and it's a very volatile environment. I felt like I needed to have a little bit wider of a stop in order to pull this off. So I was comfortable. Now you might be wondering, well, why do you even bother having the SPY up at all? I like seeing the price action with regards to the dollar amounts. For me, it helps me. I'm also a little bit more used to the SPY than I am with just doing it straight off the ES. So for me, I like having the SPY. You don't have to. I mean, I suppose you could just go ahead and use this if you're using Top Step, but I like having the SPY in front of me for those reasons. So now what happens? All right. So where are you going to take profit in all this? I go by the thirds. So what I do is I take the bottom third. So I kind of go up a third from the bottom, get in there, and I go from a third from the top, and I come down there and I look at that range to take profit in. Now, if it goes above it, that's fine. If it goes below it, okay. But I'm really looking to get in there. I like that, and like I said, it's worked out for me. Everyone's different, but this seems to work out. Okay, so let's see what ends up happening. So as you can see, so this is going to be over on the, this is going to be on the combine, right? I have two contracts here. And again, keeping everything down where I have it, essentially mirroring what is over at, over on the Express account. Okay, so what happens? Well, look at this. It just touches, right? Barely. And I'm not gonna lie, like I would love to tell you that I am, stoic and I can just go ahead and walk away from this thing and be like, hey, no problem. But I am human like everybody else. And boy, did I want to move that stop, that take profit, right? I was a little less concerned about down here. I mean, I guess it could break down, that's fine, but like here, I wanted to move it down. But I thought, you know what? Stick to your plan. I mean, right now you're at this point, I was up around 87%. Was my percentage, and this has worked out for me in the past. So I was just happy sticking with what's worked out well. So I was just gonna stick with my game plan. But boy, was it hard to do, and especially when you're sitting there for all this time, because this trade went on for some like 9 minutes of just sitting here, right? It goes on and on and on, and then Do we get there? Let's see what happens. We're moving it, we're moving it, we're moving it, we're moving it. And boom, we hit it right there. And ultimately, this market ended up going way up from here. Well, not way up, but it went up beyond this point. But I don't know. I like playing what's in front of me. And like I said, right now I'm, like an 87% on Top Step for my winning trades over the course of, I'd say I'm about 17 days now, 18 days into my Express account. And I like this strategy. This works out for me. It doesn't work out all the time. Like anything in trading, it's risky. You can lose money. So I'm not saying you should copy this. I'm just saying that this trade works out. It works out pretty well. And I've been fighting with, like, one of the things I've been working on, I've been fighting is, where am I going to put the stop? And I was putting it initially, like, right at the bottom. But the problem is, if you see this, you get stopped out all the time, right? Comes down, comes down, comes down. You maybe put it down here, but even then, with these wicks, you know, the market's been all over the place. I was comfortable taking the ATR, just multiplying it by 2 and dropping down from wherever I was at, as long as I had a good entry. So being patient on that entry is so important, right? And just making sure that you're getting it at the right spot so you can get out at the right spot. And then you know, maybe walking away. So, but like I said, I like this strategy. So far, it's worked out well. Again, the strategies don't always work all the time, so you are going to lose, but it's worked out okay. So if you like this and you like videos like this, then I definitely recommend liking, subscribing to this channel. It really does help the channel. I'm trying to bring out some of these studies I've been running, spy and test different things, and that way you can see me fall on my face, so that way you don't have to. So if you can like, subscribe, that'd be great. We do have a Substack going as well that we're driving subscribers for. That's where we have all of our studies published, and we have a 20 EMA guide there. It's a daily breakdown where it breaks down the day by day price action of the SPY. It's been going back since like the beginning of December. So that might be something that you're interested in. It's not. It's only $2.50 to subscribe to the Substack. The link will be in the description. So if you can do that, that also help out as well. And then you can just cancel if you want to after that as well. So just to recap, I define my trade zone using the first 15-minute range. I'm going to wait for that EMA to clear. And then I'm going to enter on the first opposing candle. Once it does, it's going to be up here. At least, or I should say, a first opposing candle that doesn't drop the ATR back into the range. So that's going to be up here. And then from there, I'm going to create my, where I'm going to exit at, right? So once I get in here, I'm looking for, again, about 2/3 of the movement from the bottom to the top, exiting there, and then placing my my entry point at 1/3 the movement from the bottom, and then taking that range, getting in and getting out, and that has worked for me so far. These are not banger plays by any means, but I'm looking for consistency over time. I'm not looking, and the market can go up from there, can come back down from there. That's totally fine. And that is about it. Again, don't forget to drop a comment. What's your biggest challenge with SPY trading? And don't forget to like and subscribe if you liked this information, so that way these videos get pushed out to you and to others who might need it and find it helpful. And I will see you in the next one.